Welcome to the Off Street podcast featuring Adam Reiner and Sean Dan. Off Street contains general information that is not suitable for everyone and contains certain forward-looking statements of future possibilities that, due to known and unknown risks and other uncertainties and factors, may differ materially from actual results. As such, there is no guarantee that any views and opinions expressed herein will come to pass. Off Street is presented for informational purposes, and nothing contained herein should be construed as a solicitation to buy or sell any security or as an offer to provide investment, tax, or legal advice. Additionally, this communication contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to their accuracy or completeness. Adam and Sean are employees of Marshall Financial Group, Inc., a registered investment advisor. For additional information about the firm, including its services and fees, send for the firm's disclosure brochure or visit advisorinfo.sec.gov.
All right, Sean, it is Friday, December 22nd, 12 o'clock in the afternoon. Welcome to the first ever Off Street Awards.
Yes, the inaugural, first annual, whatever you want to call it. It's a big day. It's a big day.
We are in the Off Street studios right now, dressed for the event.
Yeah, it's dressed to the nines. Just trust us on that. Very, very excited to record this episode. Probably the most excited we've been.
Yes, it's been quite a journey for the first year of the podcast here, Sean.
Yes.
Since we started it in April to where we are today, it's been a great run.
It's been a fun journey. 37 weeks. We've produced 36 episodes.
We've gone global.
We've gone global. We've had downloads from over a dozen countries at this point, and we are actually, according to listennotes.com, in the top 10% for most popular podcasts worldwide. So a huge thank you to everyone who's listened, supported, given us feedback. It's been a fun ride.
Excited to see where it goes next year.
Yes.
We've done some interesting interviews as well this past year.
Yes, we've talked to Brian Walsh from SoFi, Caleb Silver from Investopedia, David Botsit from Charles Schwab, and others. So a lot of fun. Got to meet a lot of interesting people. We got to travel, Arizona, Philadelphia.
Yes, it's been a lot of fun. But today we will take a break from the regular banter that we do and revisit some of the more interesting finance stories of the past year. So that's how the Off Street Awards were designed.
Yes, instead of a year in review, let's make it a little interesting, do it in the format of an award show and still try and hit all those topics.
A little bit of fun and lighthearted as we end the year.
Yep.
But we were having the conversation about the awards, and I described it to you as a combination of the Emmys, the Dundies, if you're a fan of The Office, and the Razzies.
Had no idea what the Razzies were.
I was very surprised by that.
That might have been a generation gap thing. Is that current?
I believe it's still current, yeah.
Okay.
If you're not familiar, the Razzies are a parody award show honoring the worst cinematic failures.
Good to know.
Felt the need to clarify. So we have these awards broken out by various categories. Thank you again to all those who voted. And
yes.
Let's jump into the first category here.
Yep.
The first category is the Logan Roy Memorial Shocking Executive Decision of the Year Award.
Just rolls off the tongue.
It does. Very catchy. So this award is named after the patriarch of the Roy family in the hit TV drama Succession. Very popular show over the past couple years. And Logan Roy was the volatile, egocentric, and cunning antagonist of the show. And during 2023, we saw some main antagonists emerge in financial media. So let's take a look at this year's nominees. We have Elon Musk purchasing Twitter and then renaming it X. I remember the day it happened. I thought it was a joke message. The OpenAI board for firing and then rehiring Sam Altman.
One of those things that we put it in here, and I was like, oh, that must have happened 6 months ago. Yes. No, it happened right before Thanksgiving. It was only a month ago.
And this may have been the story that inspired the category.
Yes.
The whole thing felt like something straight from the show.
Yep.
And then we have the Silicon Valley Bank exec team for selling millions of dollars of stock less than 2 weeks before the bank's collapse.
Tough look.
And that whole banking crisis in March feels like a lifetime ago at this point. Yeah,
you can believe that was 9 months ago. Just wild.
So the winner of the Logan Roy Memorial Shocking Executive Decision of the Year Award is Silicon Valley Bank executives.
Can't do it.
I believe it was both the CEO and CFO who sold shares at the end of February, just 2 weeks before the bank collapsed.
Yeah, just one of those things, just optically it looks terrible. He filed to sell them in January, went through end of February, SVB collapses early March. you'd think, CEO selling 3.6 million worth of shares, his first sale in over a year. Tough optics. You'd have to think there was some turmoil going on by January.
Yes, and while not a nominee for this category, still related to Silicon Valley Bank, they also paid employees bonuses just hours before the collapse of the bank. Again, poor optics. And I think a majority of deposits at SVB were uninsured.
Government had to step in. Pretty crazy when Elon Musk, Twitter, and renaming X, and then having its value is not the winner.
Yes.
There were worse executive actions throughout the year. So I definitely don't want to say credit to SVB, but I guess it's a mark of the brashness of SVB executives.
If you had told me in March about the bank failure and where we would go this year, wouldn't have expected it to be
not
as good of a year as it has been. There was a weekend when the news broke that you and I were working on a piece to send out to clients like that Monday morning.
We had a fire drill on like a Sunday night. We were
Yes.
monitoring out throughout the week, and it was like the Michael Scott, it's happening.
Right?
That was a wild time.
It was. Move on to the second category. The Jerome Powell Quote of the Year Award. I think this was the year we got to see a little bit more of Jay's personality.
Yeah, we were introduced to Jay after seeing so much of Jerome.
Yes, that's right. Powell was introduced as the Fed chair in February 2018. In 2020, a lot of the policies that his Fed implemented arguably helped stave off a worse economic crisis, though on the back end, it also helped drive some of the inflation that we saw as the economy normalized. I believe in 22, we had written a commentary called Dodged Bullets Can Ricochet that described some of this, which, speaking of fire drill, we were at a conference when we were working on that piece.
Wow.
And there was a fire alarm going off as we were trying to make the final edits.
How about that?
A lot of interest in Powell over the past year. It seems, judging by market reaction, that maybe there's a chance that there is a soft landing.
It was definitely a good year for Jay Powell.
Yes.
Jay Powell is exiting 2023 with a pretty good look right now.
High hopes. So without further ado, here are the Powell quote nominees. I've been a Grateful Dead fan for 50 years. Just close the effing door. And saying a really good inflation report is as fun as it gets.
I remember when that picture of him at the Grateful Dead concert came out, and people being, it was like a Bigfoot sighting. People were like, is this real? Can we get confirmation that this is actually Jay Powell?
It was kind of grainy.
Yes,
photo.
It was grainy. He was mid-walk. It was a side profile.
There was a hat. He had a ball cap on. Still the button-down shirt.
You pointed out a good sign that it probably was Jay, as he was dressed business casual at a Grateful Dead show.
Yes.
So only Jay. But it was a congressman who asked him about it in a hearing, which is where we got that quote and confirmation that he is a Grateful Dead fan.
Yes.
Never would have guessed it.
The close the effing door was after his second meeting in a row was interrupted by climate protesters.
Yes.
And a very frustrated Jay Powell.
A guy that you never see get frustrated. His temperature never rises no matter what. And he got a little frisky that day.
Yes.
There was a hot mic on Bloomberg.
There was a hot mic and you heard it very clear. And I remember yelling out to you in your office and saying, did you hear that? I think that was Powell. And then Bloomberg had confirmed. And the final nominee was inflation as fun as it gets. Feels like a very Powell type quote. And that was during a speech at Spelman College. And the winner is saying a really good inflation report is as fun as it gets.
I need this from my Fed chair.
Yes.
I need a Fed chair who's this locked in and cares this much about the nitty gritty of economics. He's not doing this for fun. He's doing this because he's just a grinder.
Yes. For the full quote was, so it was during a speech on December 1st at Spelman College. Powell was asked, what does fun look like for the Fed chair? And he said, for me, a big party. I mean, this is as fun as it gets. A really good inflation report.
The dude just, he is who he is. If he wasn't the Fed chair, I still think he'd spend 24 hours a day reading academic papers about some arcane inflation metric in a library full of mahogany and books.
Oh, yeah. Yeah. I think in the one book, $1 Trillion Triage, that I drive you crazy with all the time, I think it says that's what he would read. He would read academic papers. I also enjoyed really good inflation reports this year. It was fun.
Who didn't?
It was a lot more fun than last year when they were bad. Yes. And I think, judging by market performance, everyone enjoyed these reports.
When I hear this stuff about Jay, I think of that footage of Kobe Bryant when he was early in his career and he'd be doing wind sprints by himself at 3 a.m. in the gym just because no one else was grinding at that time. I think about that with Jay.
You know, during the past Fed meeting, Powell said they are not declaring victory yet. But if they can orchestrate a soft landing of the economy and no recession, maybe Powell has those iconic Kobe photos, just fist on his head holding the trophy
in the locker
moment
room.
of disbelief that all the hard work finally paid off.
We'll put that in the drafts folder for the Twitter. We'll make up that meme, put his face on Kobe.
There we go. Have to keep an eye on that one for a nominee for next year. So the third category, the inflation is transitory Memorial Strangest Price Change of the Year Award. It's a mouthful, so I'll do it again. The Inflation is Transitory Memorial Strangest Price Change of the Year Award. Some good ones in this category. So the nominees: eggs declining 22% in price, admission to sporting events up more than 16%, and food from vending machines and mobile vendors up about 15% over the past year. You know, some obvious ones here: eggs, big story in 22. Admission to sporting events, understandable. Experiences are still a big draw for consumers at this point. And food from vending machines,
Who can say?
I can't explain that one.
I kind of in real time had this thought. Have you noticed vending machines now? It's a lot of. It used to just be you had to feed in the dollar and it wouldn't work ever.
Yes.
Now you can tap your card. I wonder if it's that. People just tap their card. They don't have
They're
to
not paying
physically like take $2 out of their wallet.
Maybe
And so they're like, oh, it's fake.
They don't pay attention to how much it costs.
It's like Venmo. Like
Yeah.
like you know the idea that people say like Venmo's play money. It's not real money. Like
Sure.
some people have said that. But yeah, you just tap your credit card. So maybe they're just trying to gouge you now.
Yeah, it could be. But the winner is eggs. Which
It's fitting.
it was a blowout in this category.
Yeah, got about 73% of the vote. Makes sense. Most people buy it most weeks and then go to the store. It's one of those commodities like gas where you think it should be about the same each week, and when it's not, you raise your eyebrows.
2022, big spike in egg prices. Production was hit by an avian flu that wiped out a little more than 50 million birds in the U.S., sent prices soaring. So now we're kind of on the back end of that. Prices have fallen pretty consistently since they peaked near 5. Egg prices pretty close to 10-year average at this point, in the low 2s.
For a dozen eggs.
It's
It's crazy. Ben Carlson had this point last year, just to piggyback off of it. Eggs and chickens, is that the best deal out there?
Yeah,
Like-
when you explain the logic, it does sound like a good deal.
Like the amount of calories and protein, like good macros that you can get from eggs and chicken, and like you can buy a full rotisserie chicken at Costco for like $5 cooked. Like, come on.
Yeah.
You can't beat that.
No, I mean, even a dozen eggs for, I think the national average right now is around $2.10.
It's crazy.
$2.10 for a dozen.
It's crazy. As we get close to Christmas here, very polarizing debate right now on social media. Do you like deviled eggs?
I love deviled eggs.
You're good with deviled eggs.
The only egg I do not like is a runny egg.
Any form of runny egg.
Yeah, like an over easy egg, I'm out. I'm out on like the dippy kind of eggs. Yeah, I don't. It weirds me out. But yes, eggs very popular in the news in 22. Once prices went up, hardly saw any stories as prices normalized, and you know all that stuff impacts consumer sentiment.
Yeah. Good reminder of the financial world is usually pretty decent at finding equilibrium in the long run. So good refreshing to see eggs come back down. But all right, moving on. Category number 4, the Forbes 30 Under 30 Fiasco of the Year Award. Might even be able to sub out the word fiasco for fraud.
Yes.
Here, but we didn't want to celebrate fraud, so we said fiasco. So 3 nominees here, all Forbes 30 Under 30 winners. Kind of unfortunately for Forbes, a lot of prior winners have been exposed as frauds.
Isn't that kind of a tough look?
It's tough, but I think there probably is some selection bias there of like, if you're that young and experience that big a success, are you more likely for fraud, or did your success come because of fraud?
Who can say?
A little bit of both maybe in these nominees, but we'll go through the nominees here. Nominee number 1, one of the most popular people in finance of the past 2 years, the founder and former CEO of FTX, Sam Bankman-Fried, SBF. Had maybe the worst year of anyone this year. He was found guilty of 7 counts of fraud, facing over 100 years in prison. He's going through the appeal process now, I believe, but lost billions in customer funds when FTX blew up. Number 2, Charlie Javis. This went a little bit more under the radar. She had an app for college students JP Morgan invested in, and it came out she had made up millions of her supposed clients or customers. It looks like she had worked with a professor to kind of create the illusion of having a lot more interest in her app than she actually did. JP Morgan found out, and they are currently pursuing her.
Yeah, this one definitely flew under the radar.
For a big fraud, we're talking millions of dollars here.
Yes.
Very much under the radar, but she also a 30 under 30 winner. And then the third nominee, a throwback name, Elizabeth Holmes, founder of Theranos, which was exposed to be a fraudulent blood testing device. She began an 11-year sentence for her part in that fraud. But the winner, as you probably could have guessed, the one and only Sam Bankman-Fried.
Feels like the right winner here.
Yeah. You said maybe the biggest fraud since Madoff. Probably the biggest fraud since Madoff.
Yeah, just the size of the fraud, how public it was.
The unexpectedness of it, too.
Yes.
FTX was naming stadiums. They had the biggest commercial in the Super Bowl.
Tom Brady was
last year.
doing commercials.
And also SBF had cultivated that persona of, oh, don't worry about me. I'm just the dorky, awkward, goofy guy.
Yep.
I'm effective altruist. I want to give away all my money. I'm not greedy. No fraud here. And then boom, whole thing, House of Cards.
Yeah, he appeared on the scene out of nowhere and then disappeared just as quickly. There was the Michael Lewis book that came out this year about FTX. Probably one of the more popular books that was published this year.
Michael Lewis, we should note, got a lot of flack for it. A lot of people thought he painted SBF in a more favorable light than he deserved. Just one of those stranger than fiction stories that you wouldn't believe it's true unless you lived through it.
That's right.
Moving on. Category number 5, one of my favorites here, a classic. You see it in every award show, especially in the sports arena. The Comeback Player of the Year award. So, as we mentioned, 2023.
Who doesn't love an underdog story?
The nominees here all had great 2023s, much of them after a bad 2022. So, the first nominee, the 60/40 portfolio.
Yes.
Solid returns while also resetting bond yields higher after calls that the strategy was dead. So we rode that carousel once again of the 60/40 is dead just for it to rip back to life.
Yes, one of my theories that I've shared with you in the past is when news stories become so one-sided, like cash is trash, 60/40 is dead, it's usually a great reverse indicator.
Yes. So huge year for the 60/40. Diversified investing is back in style. You love to see it. The second nominee, the tech sector. So the NASDAQ 100, 100 biggest tech names, as of last week was up 52% year to date after being down 33 in 2022. So one of the biggest falls of 2022, one of the biggest jump backs this year, part of that bigger kind of AI trend, which we'll talk more about later. And then our third nominee, fun in economics. Since when have so many people cared about economic data?
You know, this feels like Jay Powell put this one in as a nominee.
The winner for the Comeback Player of the Year award is the 60/40 portfolio.
Well deserved.
I'm happy about this one. This one earned my vote.
Congrats,
as well.
60/40, by the way.
But 60/40 portfolio, much maligned in that late 2010s period where rates were just so low and you weren't getting much juice out of those bond yields.
Yep.
Bond yields are back in a big way this year, and we even got a good returns in bonds in the face of higher yields as well.
Just look at bonds over the past 2 months. Barclays aggregate bond index was negative 3% about year to date at the end of October. Now, challenging cash returns at this point on money markets.
It feels like a good palate cleanser. After 2020 and 2021 got so weird, and we're talking GameStop and Bitcoin, and this is the new age of investing. And now we're getting back to basics, like the 60/40, good old tried and true, your grandparents' portfolio.
Yeah, it reminds me of a Powell quote from the past Fed meeting where he said 23 will be the year when most things normalize.
Yeah. Feel more comfy recently. Comeback Player of the Year, 60/40 portfolio.
This next category, kind of a niche topic.
This is category 6, the Bill Ackman Hell is Coming Take of the Year award. So Bill Ackman, notable hedge fund investor, he's been in the news a lot lately. He, back in March 2020, had an appearance on CNBC where at the peak of the COVID hysteria, kind of that late March period right before he bottomed, he went on and kind of had a meltdown. He said, hell is coming. It sounded like he was getting emotional.
Yes, I can still picture the video vividly.
Yeah, he's getting choked up, saying he's got to protect his parents, stocks. This is a new age, hunker down. World is ending, apocalyptic
Yes, get ready
vibes.
for depression vibes.
But the main takeaway people had is he said, hell is coming. And people still pull that out every once in a while. So that was a big, crazy take from 2020. And so here we are celebrating some of the crazier takes of 2023. So nominee number 1, Michael Burry of Big Short fame. He tweeted the word sell in all caps, SELL, back in January. And now stocks are up 25% year to date. To tough luck.
Tough.
Number 2, Chamath Palihapitiya from the All In podcast of social capital and Facebook fame. He created a lot of SPACs in 2020, 2021. The SPAC craze had a lot of investors. Almost all of them have since come down in the 80 to 90% range. And a troll was poking fun at him and really accusing him of being a pump and dump guy. And he tweeted, I'm in the arena trying stuff. So his response is he compared himself to a gladiator. And, sometimes you get it right, sometimes you get it wrong. But hey, I'm in the arena trying stuff. So sorry you lost 90% of your wealth.
One of those more cringy moments of the year.
Yes. He's the king of cringe and dorkiness. And that's nominee number 2. Nominee number 3, personal finance extraordinaire Dave Ramsey. He, in a recent radio appearance, said he is, quote, perfectly comfortable drawing 8% each year from retirement portfolios. General conventional wisdom is usually about 4% is what people will quote. Dave Ramsey said, go crazy. Take out 8% per year.
This was one of those frustrating quotes of the year.
Crazy. Just wrong. Flat out wrong.
And it really highlighted the difference between fiduciary advisors and someone who is a financial coach. Completely different regulation, what you can say and can't say, and what may even be considered good advice.
Yes, we're fiduciaries. Dave Ramsey doesn't manage money. He can say pretty much whatever he wants with almost impunity to some extent. And to say just, hey, you're in retirement, take out 8% of your portfolio a year, feels like incredibly dangerous advice.
Yes, it doesn't take into account sequence of return risk or anything like that.
Maybe one day we'll create a whole episode about it, but we'll just keep it at, if you're listening to Dave Ramsey, please be incredibly careful. But anyways, back to the category. The winner of the Bill Ackman Hell is Coming Take of the Year award is Michael Burry for tweeting sell in a year where the market's up 25%. The guy's bearish. He's always been bearish. He's always going to be bearish.
That's how he made his money. That's what made him a good character in The Big Short.
Yes.
He bet against housing.
Yes, but really since that call, he hasn't had many that have gone his way. People still talk about it every time he makes a big market call, but in a world where the market normally goes up, it's tough to be a bear.
Yes.
So Michael Burry, winner.
That takes us to the financial buzzword / phrase of the year award. Some good ones in here. So the nominees are higher for longer. Monetary policy will keep interest rates higher for a longer period of time to bring down inflation.
Already up for debate.
Yes, that is already being put to the test. The vibe session, which was a new term introduced this year by
Kyla Scanlon.
And it is a way to describe the economy doing well, but the vibes are poor, which felt right for much of the year.
Much of the year, this year, last year, and even still kind of rings true today.
Yes,
we're caught in a vibe session.
Ties back to the eggs. That many people remember the news stories of the price of eggs going up. Not so many stories of when egg prices normalized.
Yes.
And then the AI revolution kind of burst onto the scene about this time last year and really dominated 23. You think of the stocks that performed the best, those big 7 tech companies that can all do a little something with AI. Lots of companies trying to find a way to introduce AI into earnings reports, even though there may or may not be a real tie-in with their business.
It feels similar to I think it was like 2019 when blockchain burst on and everyone's quoting blockchain and then cryptos.
Yes.
It's the new fad. And it seems like it has more bite than those things, but time will tell for sure.
Yes. Well, the winner is AI revolution.
It's right. It was a close battle with higher for longer, but AI, everyone was quoting it in their earnings calls. Everyone was trying to find a way to say, hey, our business could benefit from AI, which very well could.
Give an idea of how popular artificial intelligence was this past year. using that story count feature in Bloomberg. Between 2019 and year-end 22, there are less than, on average, 24,000 stories per month written that involved AI on some level. This year alone, the monthly average was 110,000 stories. So very popular. So a well-deserved winner in that category.
Definitely.
The next award, this is for our more regular podcast listeners. This is the Uncorrelated Story of the Year award. So each episode at the end, we do a segment called Uncorrelated, where we take interesting stories with some loose financial tie-in and try to tie it back to the economy and markets. So the nominees for this category are the dime heist. $234,000 in dimes was stolen from a truck, and the thieves were later caught. This is a Philadelphia story. It was the Philadelphia Mint that was involved in this one.
This was one of our first episodes, and we talked about maybe one of the worst things to steal, if you think about it.
Yes.
Like something that's so heavy and kind of hard to launder. Like if you want to get in the mind of a thief.
Yes. What are you going to do with dimes?
And $234,000 worth of dimes, that's millions of dimes. Like
if I recall the story correctly, I think they put them in trash cans into the back of a pickup truck.
Yeah, not very well thought out crime.
The next nominee, Taco Tuesday. It was the battle between Taco Bell and Taco John for the right to use the phrase Taco Tuesday. This was a big national story, but actually involved Taco John from New Jersey.
Yes. Classic David versus Goliath. You have big company and all their lawyers versus a guy who kind of got lucky in trademarked Taco Tuesday back in, I think it was the 70s.
Yeah, a long time ago.
Before that was really even a thing. And unfortunately, kind of an update since we talked about it, looks like Taco John has relinquished.
Yes.
Unfortunately.
So
Goliath won.
It's hard to compete with the large coffers of a publicly traded company.
Yes. Yes.
The next one, maybe one of our more controversial uncorrelated stories.
Most contentious for sure.
Yes. Reclining seats on airplanes, arguments over proper airline seat etiquette.
To lean or not to lean.
Yes. And then the final nominee, Florida Man games, beer, wrestling, and evading police simulate the Florida Man experience.
Yes. Something we all can identify with. You've all seen the articles.
Yes.
You talked about it's a fun exercise to Google Florida Man and then your birthday.
Your birthday. See what kind of stories pop up. But the winner for this category, reclining seats on airplanes.
We got a lot of heat for this when
Yes.
this episode first came out because me and you are strongly in the camp of airplanes are already uncomfortable enough. Don't recline and compound the problem for the person behind you. It's inconsiderate.
You don't really gain that much. What do you gain? An extra inch or two of recline button?
Doesn't matter. People got mad. People said, "Why would it be there if you're not supposed to recline?" And I think there's a spectrum, and I think it's okay on longer flights or if it's a red eye and you need to sleep. But if you're taking an hour and a half long flight from Philly to Chicago, you don't need to lean your seat.
Yes, it sparked a big controversy over who owns the seat back. Is it the person sitting in the seat that the back is part of, or is it the person looking at the back of the seat?
Yes.
Who has ownership of the seat back?
Yes. And it really opens up a whole can of worms, too, there's a lot of, when you think about it, a lot of airplane etiquette to consider. Who has the right to the armrest? Should you ever touch the seat of the person in front of you? You're talking about knees or leaning into the seat or pushing on the seat to get up. It's really just not a fun experience to be on a plane in etiquette.
You're already packed in there. Everyone's high-strung for the most part from having to travel.
Yes. There's a Wall Street Journal article this morning, actually, about how incidences of disputes, arguments, fights are way up on flights really since COVID, which kind of checks out.
Yeah.
I feel like people forgot how to act in public post-COVID.
Well, I think a lot of people are traveling post-COVID as well. So.
Yes, but this debate will rage on. We're not going to
Yes.
get any sort of resolution on it, but...
Yes, someone made us aware of a device you could purchase to clip onto the seat to prevent someone in front of you from reclining. It was too far, and it is banned now. So do not purchase it. You'll probably end up on a list somewhere.
That feels right. But there you go. Winner of Uncorrelated Story of the Year. We'll move on here to category number 9, one of the marquee categories of the Off Street Awards. We have the Financial Person of the Year award. So 3 heavy hitters here. Nominee number 1, Taylor Swift, for stimulating billions in consumer spending with her Eras Tour.
What hasn't she done this
It's
year?
an obvious choice. She has already won Time Person of the Year. So nominee number 2, Sam Altman, OpenAI CEO. We talked about ChatGPT coming online about this time last year and the AI revolution that it's caused so far in 2023. And then finally, maybe our favorite, Jay Powell, for threading the monetary policy needle so far. I mean, we'll knock on some wood there. The winner here, pretty obvious. It was always going to be her.
Yes, it was
Taylor
a landslide.
Swift. Taylor Swift's winning in a landslide, getting about 65% of the vote.
Yes.
She deserves it.
Yes.
She deserves it.
Lots of economic gain generated from her tour around the country and really around the world.
When there's academic papers written about you come to town and there's tangible impact on that city's economy, you're the financial person of the year.
Congratulations, Taylor. I believe 4 of our first 6 episodes had some kind of Taylor Swift story as part of them.
It wouldn't surprise me. She was everywhere this year. You couldn't avoid it. And then now she's dominating the NFL streets.
Yeah,
She's
everywhere. Just
dating Travis Kelce and is at every Chiefs games now.
imagine if the Chiefs make the Super Bowl.
Yeah. No, it's...
Who's the musical guest at this year's Super Bowl? Do you know?
Is it Usher?
Is it? You think you might be right. Maybe if the Chiefs get in, Taylor Swift makes an appearance.
Why not?
I could see it happening.
But Taylor, our people will get in touch with your people and make sure you get the award. So look out for that. And our last award. Everyone likes to talk about stock picks, Adam. It's a question that we get all the time. It annoys us. But people always ask, what's your favorite stock pick right now?
Yes, what's the hot stock?
So our final category of the year is the S&P 500 Rollercoaster Ride of the Year. More or less the Stock of the Year award, if you want to call it that. But the nominees are, first, Carnival Cruise Lines, ticker CCL. They were down 60% in 2022 and have roared back this year, up 131% year to date. So cruise lines may not have, when you think of the stocks that rallied this year, you probably didn't think of cruise lines.
They were not in my top 5 guesses.
No, not at all. Nominee number 2, Meta Platforms, formerly known as Facebook, down 64% in 2022, have ripped back up 178% year to date in 2023. To round out the category, our first nominee of the day was Elon Musk. We're bringing it back to him with the last nominee.
How about that?
We have Tesla, down 65% in 2022, up 106% year to date in 2023. 3 stocks that, you know, when people say, why don't you just buy into the biggest names? Why don't you buy into the tech stuff? Well, you open yourself to these sorts of swings when it happens.
And math is a funny thing.
Math in finance is funny. Compounding is a crazy, crazy thing. It's the 8th wonder of the world, according to Albert Einstein.
There you go.
But you talk about compounding. Meta Platforms, they were down 64% in 2022 versus 178% positive this year. That gets you back to even, Adam. Down 64, you need to go up 178% plus. Crazy stuff.
It's amazing. It's
crazy stuff.
I think it's one of those financial and math concepts that the average person has trouble understanding.
Yes. You ask someone, oh, you're down 50%. What do you need to get back? Most people would say 50. It is not. It is 100%. So it's why we stress.
It only gets worse the further you get to negative 100.
Yes. Another stock in the news lately, Carvana, not a nominee, but they're up about, I think, 1,300% in the last year. They're still down 80+% from their all-time highs because they dropped so far. So that's why we stress avoid the drawdowns. But to get back to the winner of our final category, Rollercoaster Ride of the Year award, it goes to Meta Platforms, down 64 last year, up 178 this year. One of the biggest roller coaster rides.
Yes, that was right. Well, Sean, it's been a fun year. We learned a lot with the podcast. We had a lot of fun with it.
Yes. Thank you again, genuinely, for everyone who's listened, given us feedback. We still welcome all the feedback that you can give, ways to improve, things we're doing wrong that we can fix. Again, thank you. It's been a fun 2023, and we're excited to see what 2024 has in store.
That's right. We will be back the first week of January with our more regular style episodes. So look forward to the new year. Hope everyone has a wonderful holiday and a prosperous new year.
Yes.
And until next time.
See you then.